With all the Ethereum and Bitcoin spot ETF news, it's hard not to be bullish on Layer 2 protocols. And today, we're going to be talking about Polygon's 𝗕𝗃, one of the most prominent Layer 2 scaling solutions for the Ethereum chain. And I'm going to be going through why I am really bullish on 𝗕𝗃. Let's roll that intro and get right down into it. Hi guys, welcome back to the channel. Welcome back to another video where we're discussing why I am so bullish on some of my favorite cryptocurrencies. And today's topic is Polygon's 𝗕𝗃. 𝗕𝗃 is one of my favorite layer 2 scaling protocols when it comes to Ethereum chain. Now, we obviously know that the gas fees on Ethereum can be horrendous, and we need layer 2s to basically manage that scalability element for these layer 1s such as Ethereum. And really that is where Polygon's 𝗕𝗃 really comes into its own. Now, 𝗕𝗃 performed insanely well in the previous bullish market. And today's video, I'm going to be going through some of the technical elements of the charts and the price action for 𝗕𝗃 and why I am so bullish on the future for this particular altcoin. So let's go right down into the desktop. So as we can see here, this is Polygon's 𝗕𝗃 paired up with USD. We're using the 1 hour Binance chart here. And what's really interesting is the price action so far. So there are, of course, concerns that we potentially have on Polygon's 𝗕𝗃. But for the most part, for the last few months or so, I was thinking that there might be a bigger move to the downside. I don't think that is something that we are going to see necessarily. I think we can still come down a bit more, but I'm not looking at this as being a big kind of new bear market low point at this particular point in the game. But we do see here the idea of an impulsive break to the downside here. Okay, and what's really interesting about that is that although that is technically true, we really do struggle with our wave count over here on the wave 1 situation. Now, we do clearly see a 5-wave move here though. And so what's really interesting is obviously the way that this is kind of structured out and the move that we've had back to the upside. Now, I think we are going to end up somewhere in between these two yellow lines that you see on the chart, essentially somewhere between 14.12 and 31.6. Now, with a bit of luck, we can avoid the lower side and we can just retest those existing lows. But we have to consider there is, of course, the bigger corrections that we have seen most recently here coming in, and we are going to be looking at this kind of testing around that kind of 30-cent level. So we do know that there's some cheaper prices to come, but if we are lucky in the market, we might be able to find support at around that 31.6. Creates a double bottom bullish scenario for 𝗕𝗃. Okay, so that's going to be the hope. That's going to be the kind of the dream here to kind of prevent ourselves from falling down too far. Now, this move to the downside is after seeing a significant high at $2.92.3, which, if you were really an early investor in Polygon 𝗕𝗃, you could have picked it up for less than 1 cent. Chris is often proud about how he picked up 𝗕𝗃 for 1.5 cent, and it's been a really good performer ever since we kind of got involved in 𝗕𝗃. Now, the healthy corrections that we've seen so far have caused, I guess, some retail investors a little bit of discomfort in their portfolios. Potentially some of them have sold at a loss and all that kind of stuff and maybe losing faith in 𝗕𝗃. But ultimately, with Ethereum and the Ethereum spot ETF going live, we are, of course, going to see gas fees on the rise, not just on Ethereum, but also for Bitcoin as well. So layer 2s are going to be really important in that next bullish market. And I think Polygon's 𝗕𝗃 is incredibly well positioned to take advantage of that market and that market share. Don't get me wrong though, there are more than one layer 2 solutions for the Ethereum chain. There are many, and I think the market is going to be divvied out between many of them, with Polygon's 𝗕𝗃 probably being one of the front runners as it has first market advantage. Back into the charts here, we can see that there's going to be a need for a bit of a retracement and a bit of a move to the downside. This is going to be a great opportunity for dollar cost averaging. Now, I'm an advocate for basically trying to build your portfolio through dollar cost averaging. Now, there's many different strategies that you may have in terms of trying to build your portfolio positions and all that kind of stuff. You can, of course, try to snipe the bottom, and that works for very few people. Generally speaking, a dollar cost averaging strategy works for the many. This is one where you don't necessarily swing swing trade in and out all the time. There's times where you can do that, but where I find the market at the moment is just a DCA market. Basically, if price comes down, you just add more fiat into the market so that you can build your position over a longer period of time. If you're trying to swing the market, that can work, but sometimes you can get caught out if you're not on the charts every single day, 365 days a year. So just take that with a bit of caution. And also, it's probably worth noting at this point in the video as well that I am no financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on the data in the charts as I personally see it. If you do have access to a financial advisor, you should probably go ahead and consult them because they will know your financial situation a lot better than I would. Okay, so let's take a look, right? So if we're expecting moves to the downside here, that will allow us then to be more predictive over where we think the price action is going in the future. So let's scale this up into a weekly chart. Okay, so here we have 𝗕𝗘𝗪𝗔𝗥𝗘 on the 𝗕𝗘𝗪 paired with USDT on the 1 week time frame. Now, as you can see, I was looking and tracking this as a zigzag pattern down towards our lows, right? 10 to 17 cents. However, I'm going to be a lot more cautious here and say that this is a highly unlikely scenario. This is not one that's necessarily going to play out. Now, for the purpose of this video and to keep our bull market highs and target ranges more conservative, I am going to leave our chart like this. This basically means because we've dropped down lower in the price, we are going to limit how high the price can go later. As in, the lower that the bear market goes, the lower the bull market high will be. That means we have a nice conservative target to be aiming towards. And these are some very bullish targets in themselves. With 𝗕𝗃 rallying up 109,000% in the last bullish market, we could see that being replicated in this next bull market that we find 𝗕𝗃 in. This is going to be driven primarily from the success of Ethereum. Ultimately, Ethereum is going to be quite successful on the back of the ETF, and of course is going to require layer 2s to really scale and push through some of the demand that's going to be coming for the Ethereum chain. Nobody wants to be paying hundreds, if not thousands of dollars to move a really small amount of cryptocurrency across the Ethereum chain, and therefore it's going to be critically important for layer 2s, specifically 𝗕𝗃. So we might not see 109,000%, but I do expect us to see some really significant gains, which brings us into our targets. Our primary targets are going to be this little yellow box right here. This essentially is going to be between $4.44 and $12.41, a nice conservative range where I think we could realistically see 𝗕𝗃 push towards. That'll be some pretty significant gains on where it was. So current low being kind of 31.6, we could see us moving up to about 1,200 upwards towards 3,800%. So some pretty good returns, but not that 109,000. Now, of course, there are the more bullish targets, and these could see 44,000% in gains, about $46 𝗕𝗃. Now, considering the Bitcoin and Ethereum spot ETFs have gone live, and the interest that we've already seen with inflows and outflows of interest within the iShares and so forth when it comes to BTC and Ethereum ETFs, we could see a significant surge in the coming months for an interest in Ethereum, thus an interest in these layer 2s like 𝗕𝗃. I think 𝗕𝗃 has a really good, strong chance of actually seeing about 45,000% in gains over the next bullish market. Now, this is not going to happen overnight. There is going to be some turbulence in the charts. We will see, some corrections, we'll see some rallies, and we'll see some fantastic moves. Now, as I said earlier, this is a conservative target. Anywhere realistically between $4 and $12 is also really conservative. $46 at 45,000%, if we were to see a significant surge with Ethereum and Polygon's 𝗕𝗃, could also be quite conservative. We might actually find the 𝗕𝗃 price rallying up significantly higher than we are expecting at this point in time and in this 𝗕𝗃 update video. So I'm going to leave it there. Let me know what your thoughts are in the comments down below. And if you're interested, why not check this video out where we discuss the future potential for VeChain.